Okay, so stream is up and running, so I got that set up. Got that set up. Now it's just a matter of doing this consistently. Okay, so I know I have no one watching right now, but if someone ends up finding this after the fact and plays this back for whatever reason, I at least want to tell my story a bit. I have been trading on and off for about 5 or 6 years. These last 3 years, I've been trying really hard to trade futures. I've done a lot of trading over the past 5 or 6 years, different kinds of trading, and let's just say I've done options, I've done futures, I've done forex, I've I've, I've made the roundabouts, like all the typical don't have enough money to do the day trading because in the PDT rule, pattern day trading, you need at least 25K in an account. Let's just say I haven't gotten there yet. And I know that it takes time, and when you're risking your own money, you need to be careful. I ain't gonna take out any loans and go trade that away, that's dumb. But I have done options, and I've had times where I'm successful with options and times where I'm not successful with options. So I think for me personally, futures has become the best outlet for me in trading. Gets me away from having to worry about the PDT rule. It gets me away from having to sorry, I was editing something. Gets me away from the PDT rule. It when you have all these prop firms in the futures game, you don't have to worry about you don't have to worry about putting up too much of your capital in order to learn a strategy and get profitable. Even though it might take you still years, and it still might take you countless hundreds of dollars. But as long as you're making progress, taking your time and having patience, which is an issue with a lot of traders, including myself, is being patient, not forcing trades, not taking every single trade possible. Because, I mean, let's be real, not every single trade is A plus that we take. Maybe you've gotten to that point where you take 1 or 2 trades a day and it's only the best trades. I haven't gotten there yet. Sometimes I still find myself trading just because out of boredom. I'm at my desk. I have to trade. But I'm slowly getting better at walking away. Especially on certain days where like maybe the best trade has already happened. and then whatever happens next is not really worth trading. All right, but I don't know. This is me still continuing my journey. I have gotten payouts last year in prop form. I mainly use Top Step. I know there's other good firms out there. I know a lot of people use like Take Profit Trader, and a lot of people use Apex, and there's Tradeify. There's so many. There's so many prop firms out there, and it's always best to diversify and try and not put all your eggs in one basket. For now, for me, I'm just focusing on Top Step because I've taken payouts from them, and even though that, yes, I know that Project X has its issues sometimes, um, but they're pretty decent about taking care of issues that pop up. So I have to say I haven't had um, a bad experience thus far with Top Step. And since I have taken payouts from them last year and this year, I think for now I will just continue to use them only until I make enough money and get profitable enough to where I feel comfortable branching out and trying to expand a little bit. But for now, trading one account, not copy trading, trying to trade 2 or 3 good setups. For now, right now, micros. Um, Instead of trying to take big swings, I don't want to take big swings no more. It's way too emotional, stressful when you get into a live account, you get into a XFA or whatever the other prop firms call it, but you get into an XFA and then you blow it on 1 or 2 trades because you're trading minis. It's nothing's more stressful than that. So I will just continue to just trade micros. I think like you can still make good money trading micros. And in fact, all the times that I have broken an account in a live account, it has been because I trade micros. No, not micros, because I trade minis. My bad. Um, all the times I've taken payouts, I've traded micros to get there. So it just depends on how much risk tolerance you can stomach, right? Some people can trade minis and be just fine, and some people can't. So you just got to find what's best for you, right? That's the whole thing about it. Um, so ooh, this is my first time streaming on here, so I I know that for now I ain't gonna have anyone really watching my content. So I am just going to stream, and I'm just making sure that it shows live on my profile, right? I'm just making sure it shows live. That's all I'm really looking for. Um, Now, I'm used to streaming on Twitch. The streaming on YouTube, it's new for me. So, sorry if the first stream is all jumbled together. I'm just doing stream settings and whatnot.
tail from 5 o'clock until the day you die.
But everything seems fine. Okay. Close that out. So alrighty, well, that's enough rambling and enough going on about the stream. Everything, for the most part, set up the way I want it to be set up. Now I'm just going to talk market for this week. So, last week, we had a new all-time high in the S&Ps. I guess that's going to pop up no matter what I do, even if I exit it off. So if you look at the daily candle here, before it came up here, there was resistance when we got up here into the 6812s. 681250s, I believe, was the 25 was the number there, and that being overextended a little bit, plus the fact that you also had a tweet or I guess a Truth Social post by the man himself on Truth Social by Trump, it sunk the market. Now, we were due for a pullback, and in my opinion, they were looking for a reason to sell it. Yeah, it's gonna pop up no matter what. They were looking for a reason to sell it. Trump gave them one, right? And since this is still technically this didn't end the bull market. This was a pullback. Now, we had a small bear flag on the daily here, and at one point here, I guess at one point here, say you can call it the bottom of that candle there. So you had this little small bearish channel here on the daily, and it looks better on the 30-minute. But we had to push down initially, and if the daily candle, when it pushed down right here on October 17th, if that would have closed red, it might have been a technical bearish breakdown or breakout to the bottom in order to target more lows, maybe around 6430s or maybe even 6300s in general. But we did not get that. It broke down and recovered all in the same day. A lot of volatility that day, and recovered and closed back in the channel. Then the next day it closed at the top of the channel, pulled back slightly, and let's say if we extend this all the way up here, close back in above, then it started getting a green candle close, and then it was shaping up to just stay strong to the upside, right? We were having these wicks on the bottom here. We had a strong green close on the 23rd, and then to top it all off, there was no bad news on the 24th. CPI, I think, came out that day and came in light, so there was no worries, there was no bad news. And then when there's no bad news, marks typically go up and to the right. So that's what happened. And so now we have all-time high again at 41.75. That's a new all-time high. So I mean, if you are coming into this week, right? New all-time high last week. on we did get a technical breakout to the upside. So if you're looking at technicals only, it is bullish, right? I mean, you don't short all-time highs, and I mean you can do anything you want, but it is usually not advisable to short all-time highs unless we reject here. Now, if we have a couple of daily closes back below 6,800, then you might can argue a bearish narrative back down to the 6,500 level. However, at the moment we are in a bullish breakout, and we had this bull flag here. If we look at Friday's trading here, and I traded Friday, so I pretty much I didn't trade early because at 9:30 we had the news, right? And since I live in Japan, my time is a little bit different as far as like I think because I'm Central Time in America. My residence in America is Central Time, so it's like a 14-hour difference than what I'm used to. So when it's 10:30 opening, 10:30 p.m. here, it is 8:30 a.m. Central. So that's when the market is opening. So I'm in front of my computer. Usually I try to be by 10, but I recently had a newborn. I say recent, 10 months. He's 10 months old today. So I try my best to be in front of my computer at 10 p.m. and try to go over the overnight trading action and see what happened, right? So doing that, so we had the CPI come in at 9:30, came in light, that sent the market up all the way up here, and we opened at the highs here. We can even go down to a smaller time frame here at 15-minute. So this right here is the opening candle, 15-minute candle. And we opened above 68.12s, which was the previous all-time high. So we open up above all-time highs, and so there was no trade for me initially, right? And it was kind of hard for me to get long because the market had already pushed up from like 67.88s all the way up here to like 68.20s, 68.30s. So it was hard for me to just go ahead and get in willy-nilly longs because I mean it's Friday. I want to end the week on a good note. I don't want to willy-nilly long at the highs, and I also don't want to short when it can continue going higher. I mean, I'm not about that. I've done that too many times before, and I've got burnt both ways, going long at the highs and going short at the highs. I've been burnt going both ways, so I always try to be patient and wait for a good trade location. So what ended up happening is when we had this pull back to here, previous all-time highs, I got in long 1 micro, and yes, in hindsight, I wish I would have taken 2 or 3. I could have been an easy just 12s to 20s, like this previous like CPI candle high at 31. I could have just taken 20 points, been done, and walked away for the day. And A+ setup because it's technical breakout rules apply. Broke out above previous all-time highs. We had a pullback into the previous all-time highs, had a wick close above, and then Had another wick close above right here, so that's 2, showing some support here at the 12s. Then we had a bullish candle rejection off of the previous all-time highs. You could have got long here. Excuse me. You could have got long here at 68.15s, targeted the CPI candle high, and that would have gave you 15 points. Now you gotta take in partials here at 23, like whatever, 1, 2, 3 profit targets. If you get into 3 micros, you can do 3 profit targets, or you can just, I don't know, set it and leave it and see what happens, and just depends on your risk tolerance and your type of trading strategy. I took 10 points, got off at 22s, took my 50 bucks off of 1 micro. I mean, it was 1, 2, 3, 4, 5, 6, 7, around 7 5-minute candles. I mean, 35 minutes, 50 bucks. I don't make that now at my job, so it's all about perspective, in my opinion, and I'm trying to shape my mind around that philosophy. Okay, and then after that, I waited around because I didn't want to long here in the middle of the range between here and here. But when we came up here, we got 1 rejection, right? We had 2 rejections, we had 3 rejections. So I saw 3 rejection wicks here on the 5-minute. I took a very risky short, right? So now this trade is very risky. It is not an A plus setup, it's not a B setup. I would call it a C setup on the fact that we've gotten, this is CPI high, we got 2, 3 more candles rejected from it. We had a, this 33.75, by the way, was the 15-minute opening range high that I marked out at 33.75, just for information. So we had a rejection there from it. We had a peak above and reject real hard from it. Now when I saw this, right, when I saw this rejection, I said to myself, now that was a strong enough rejection. If we get maybe a retrace back up to 30s here, around 30 to 32 area, I want to get short. Now once again, I got short 1 micro. Okay. It pushed up from 32 all the way up to 35. It took 3 points of heat on the micro. We had this little inside bear bar. Now, right here, it was an indecisive bar. It could have went up here, it could have went down here. I mean, candles are just all past information anyway. No one knows what's going to happen next. I mean, I've seen this bar and the next bar it rallies. I've seen this bar and it rejects like it did here. But you see, it ended up rejecting all the way back down here to 17s. Now I did not take the entire move, of course. I mean, if you got every single move perfectly in the market, you would be the richest person in the world, right? I mean, you'd be a millionaire, billionaire, whatever you want to call it. But I did take it from 32s all the way down to 22s, another 10-point trade, and I took another 50 bucks. That plus a random gold trade micro I took 10 bucks on earlier in the day. I ended up walking away with about 100 bucks in less than an hour, which was good enough for me on a Friday after the majority of the move happened. Now I marked this channel in real time after we got this move down and a bounce. I marked this channel in real time And after we got a rejection here, I'm worth it as well. So it 2 points and 2 points. So it ended up being a channel range. And when it pulled back down here to my bottom hook here, now you can go back and my trading stream from Friday. I did stream my trading on Friday. It is on Twitch. I would like to multi-stream to Twitch and YouTube in the future for trading and also gaming at some point. But for now, I'm just sticking to YouTube for trading because it seems to have the more trading audience on YouTube versus Twitch. And then I'm going to do my gaming on Twitch. So I think I'm just going to try and do that until I can get multi-stream up. But so when I marked this channel here at the bottom, I marked it in real time. I was like, if this channel respects, it should bounce here, and it ended up bouncing here in this candle. And now my account already at the time was locked up, right? So I couldn't take any more trades because after that last candle, I had already taken 3 trades. I was up money on a Friday. The majority of the move, in my opinion, had already been done. So I locked it up after that last trade. But I did watch it for another hour after I locked myself up, just because I was still streaming and I was trying to put my just my opinions out there. The when I saw this second green bar close next to this hammer wick, I said in stream, I was like, this has to be a buying opportunity. Like if my account was open, I would have gotten long right here on this 5-minute candle. And I guess in my mind paper traded it. And of course we had all the way back up here to the upper range of the channel. So you could have got long at 23s, gotten out right around 30s. That would have been 7 points. If you would have traded 2 macros, for example, you got out with one there, 7 points, 35 bucks. You held the second one for a break of the channel because we had 2 strong bull candles with no wicks on the upper ends, like insinuating strong buying coming in to break out of the channel. And matter of fact, we did. We broke out of the channel and we closed pretty strong up here into the 15-minute opening range high. Then we had the next candle completely push out of it and ended up being real strong out of the opening range high break. So that would have been, if you would have played until the high of this candle, I mean, it's 40s, right? So, I mean, you could have gotten another, if you got in at 23s, almost a 20-point move, would have been like 18 points roughly if you played it perfectly. If you had 2 on, you could have got 1 off here. You could have got 1 off a break of the high. If you had 3, you can get 1 here, 1 here of this touch of the high, and then the next candle break, you could have taken the other off. Just depends on how many you were long or short at the time. And now, at this point, when it already broke out, there's not much trading opportunities at this point unless we have a pullback into the 15-minute opening range high. And we did. We had a pullback to it. It rejected once. We had a pulled back again to it. And I would not have touched this candle right here because it showed a pretty bearish candle here. So this would not have been a buy candle. We looked below the 15-minute opening range high, closed back above it green, signaling strength. Now, there wasn't much volume at this point, right? Volume was dying down. You can see it here on the volume. It was dying down. So, I mean, it being a Friday, volume's dying down. Whether, like, I did not think that this breakout had any really legs to it. I didn't think it was going much of anywhere. However, technically, it is a retrace, test, resistance becomes support. You could have taken long at 36 here on the close of this candle and target the highs, which is technically a 5-point trade. On a mini, that's 250 bucks, right? I mean, on a micro, that's $25. It technically still would have been a decent trade. Now, you wouldn't have gotten much follow through past that because it ultimately took a peak above previous high that it put in at 41 and then rejected all the way back down to 28. And then it just kind of like, if you look on the 30-minute, it chopped around. It's like this is just chop plus a big red candle towards the end of the day, right? Yeah, I mean, the best trade happened before market. Like, after the news came out, if you would have taken a trade, you could have. But trading news is really risky, right? Some people got short before the news and they got destroyed. So, I mean, trading news is always risky, right? And then you had manufacturing PMI. You also had Michigan sentiment, which Michigan number, I think there was one time that the Michigan sentiment sank the market, surprisingly. But for the most part, it's like a no number. Nothing really happens on it. But I don't know. Like, past, I think it would have been midnight for my time. An hour 30 after the market opened, I mean, the market was already dead. I mean, look at this 5 minute. This is not tradable, right? I mean, in case you just kept buying off 33s and buying off 33s, selling off 41s, like it was a. If you just put a, let's say you put a line there, right? You had highs, you had 15-minute high, opening range high. You could have literally just bought here, sold here, bought here, sold up here, bought here, sold up here, and it would have worked 3 or 4 times. Eventually breaking down later in the day as money came back in, like volume came back in, we had a big selling candle into the ending day liquidity number. But yeah. And then, like, of course, NASDAQ shows the same action just on a more volatile scale, right? You had the push up CPI. You had these wicks, same wicks that we saw on ES earlier. Let's see, what was the previous all-time high in the NASDAQ? Because of course the NASDAQ also made all-time highs as well. So the previous high was here at 95.75, 93.88, 93 evens. Okay. No, I don't want that as a template. Let's say that's 93 evens, all right. I know it says 93.75, but I don't feel like messing around with it. I could go on a tick chart and put it pinpoint, but I don't feel like doing that right now. All right, so that's previous highs. Let's go in on a 15-minute here. So we had a push above same thing. By the time the market already opened, we were already pushing the highs at like at 520s. So once again, the move already happened pre-market on the news. Other than that, then it just chopped around over the rest of the day. Um, Now the Nasdaq is more volatile. It also breaks more people than it actually makes money for people. Um, People love trading Nasdaq because it moves quicker than the ES. Uh, so you can, and when it moves more and it has more volatility on slow days like this, you can be punished, don't get me wrong, but if you have a bad entry, you have a decent chance if it's in a at least in the general location you want it to be in, but you missed the you missed the entry by maybe 10 or 20 points. You have a chance of getting out break even more times than not, because there's just a higher chance of retesting your entry, right? Um, Whereas in the ES, it just doesn't move as much. So if you mess up on the entry, then it might not come back down. You might have to take a loss on it, or like a 30-point drop in the Nasdaq might only be a 1 or 2-point drop in the ES because the ES might be stronger on that day compared to the Nasdaq. So it just depends on what you enjoy trading, and some people trade soybeans, some people trade live cattle. Everyone has their own niche as far as like trading. Uh, I have tried to just start trading specifically micro ES, uh, taking 1 to 3 micros as I build up my live account again. And I want to try and limit my expenses that I have trading with prop firms, so I can try and try to even out my expenses to payout ratio and not try and lose accounts too fast, and try to be better about controlling my emotions when it comes to trading. Easier said than done, I know. But if you look at NASDAQ, it's the same thing, but on steroids when it compared to the ES. You had to push, you had to push to the highs here. Market opened out here. See this pullback to this area at 465. Now it didn't pull back to the previous all-time high. The Nasdaq. Nasdaq was a little bit stronger than the ES on Friday. So when these two areas tested here, the ES was testing previous all-time highs. So if you use the ES chart to trade the Nasdaq chart, you could assume that off the previous all-time highs in the S&Ps, that it was probably going to bounce there. You could have taken longs here on the Nasdaq. Now the first time it happened, you're not shooting in the dark if you're going off the ES chart. Like if you have the ES chart to help support your reasoning for getting long here on the Nasdaq. But if you did, the same exact time that it was touching 68.12s on the ES, this was touching 433s, 430s on the Nasdaq. You could have got long here for a touch of the highs on the CPI candle. Now on the Nasdaq, that's 100 points, right? One micro is 200 bucks. 100 points, two is 400, and if you're trading a mini, hey, guess what? That's quick, pretty quick. I mean, it's 5-minute candles, right? So 1, 2, 3 5-minute candles, and on a mini that's $2,000, right? So if you'd taken this, you of course it would have been done for the day. Now I don't know if you're taking 1 micro, 2 micros, 3 micros. I think you just take, like if you got this trade right here, you lock it up for the rest of the day. It's Friday. Don't push your luck, right? I was not trading the NASDAQ on Friday, so I did not take this trade. But if you, let's say you missed it, right? You missed this opportunity. Oh man, I can't believe I missed the 430 opportunity. I can't believe it. Well, I mean, you could have marked it on your chart. 430s, okay, we found buyers there, right? If it ever came back down to that area, now I know I can get long and have a place to put my stop, right? You can get long at this area here. So let's say you get long right around the 430s, 440s. It came back down to 432, almost the exact level of 430 that it bounced from last time. 3 points off. So when you account for the ATR at the time, it was 30 points on a 5-minute. So if it came down to 32s, you could have got long. You could have set a full ATR stop of 30 points. So your stop would be at 400s, right? And if it came back down to 400s, don't get me wrong, yes, previous all-time highs, it probably bounces there. But we're using ATR stop. Okay, we're not like if you wanted to play like the low of the CPI Canada, you could, but I mean that's a lot more risk. That's 100 points of risk. Now you could have done 100 points of risk and 100 points of profit, and then like say, hey, it's a 1-to-1 type trade, and just move up your stop quicker. Then yes, you could have done that. But in this case, just using an ATR stop at the time on the 5-minute, it would have been insufficient. It would have been enough. And right back up. Did the exact same thing that happened last time. So even if you missed the first one, you could have taken the second one and still would have been profitable, right? Then like on the ES, I think the rest of the day just kind of barcoded in a way. I mean, a little less barcoded than ES, but had the same sell-off candle at the end of the day. But thoughts going in to this week for the ES and for the NASDAQ. I mean, like I said, they're both breaking out all-time highs, bullish breakouts, closed above all-time highs. Didn't have a rejection. When we got up here, 4 hourly looked strong. On the ES, 4 hourly looks strong on both of them. Going into this next week, I mean, I don't see any reason to be bearish. You could just be bearish because you're a contrarian, which I am actually. I try not to be as contrarian as possible because it doesn't profit as much as being just a straight up bull all the time, because bull markets tend to go higher and higher and the valuations just get exploded beyond reason. But it takes a lot more time for the valuations of companies to actually come in check and a valuation of a company. A company could not be profitable. They've never made $1 in their life compared to their cash flow might be negative and their EPS might be negative and everything's negative. They don't make money. And that stock could rally from $80 to $180, and then people wonder how? Why is that stock rallying $100? Well, they're going off future valuations, future profits. And people don't want to miss out. So when a stock goes up from 80 to 120, 40 bucks over a short period of time, well, money's coming into the stock. I want to get into. I don't want to miss out. The fear of missing out, FOMO, tends to trade it up higher. And just the overall market going up to all-time highs over and over again, and it's been all-time highs 30, 40 times over this year. Of course, all the stocks is kind of rally with it, especially if you're a strong stock at the moment. But going into this next week, okay, I don't see anything as far as like technically that is telling me it's bearish at the moment. Now we could come in on Monday, we can come in on Tuesday, something happens, and then the rest of the week I could be bearish. That is very possible. But right now we are breaking out. Now if we reject here, okay, and we had, let's say, a 4-hour close or a couple hour closes below the previous all-time highs at 68.12s, that could push lower to test some previous support levels. Like this was an area of resistance here at 67.87. Multiple times on the 4-hour rejected. We broke out of it, right? Now if we come back and test the 68.12's previous all-time high, we could bounce here. Okay. If it doesn't hold, and if it breaks down and it goes down to here to the 67.87 level, we could bounce here, right? And that's typically like how I trade. I try to find levels that I can trade around, where I know that there might be a reaction, okay? And that's typically how I like to trade. Do I have fib? I do have a fib on this previous one. Okay. Now this is a fib retracement that I have from before. This is extension. This is also an extension right here as well. Okay. So let me close out that fib now and hide it. Okay. For like targets to the upside, I mean, if we can target these 50s, 56 to 50 area, and then past that at 70s on the ES. 68.12s, could look for a possible bounce. We bounced from there before last week, right? So if not, then possible bounce at 67.88s. Now, if this level doesn't hold, then I mean we start pushing into even lower levels, and then we have to go down and look at where are those levels at. I mean, we have bounces here on the 40-ish area. We also have bounces here in the 17 to 20 area, right? So this like 17 to like 25 area, you could get a bounce if it gets down to here, right? Right now, 12s is your first bet. 67.87s is your second. And then it starts getting a little bit hairy until it gets down until these 20s to 40 range. And then you can start looking for those places to hold as support. And if they hold as support, then it might push back up into the 67.87s or the 25s, right? So that's what you're looking for. NASDAQ. We'll look at NASDAQ for a minute here. And okay, so for NASDAQ, these 400s are going to be your first level of contention on the downside. The 650s, in my opinion, might be the next level of some resistance. That is a fib extension that I had from last week. Past that, let's look. Previous 320s had shown as like support and resistance, so these 300s to 330 area would be one area of contention and possible support if it came down. Past that, we're starting to look at 180s again to 100s, right? We're looking at this area to find some support in. So it just depends on what actually happens this coming week, right? We don't know. We're speculators. We speculate on the market. We don't know if it's going to go up or go down week to week. We just hope we can take some points here and there, cash out and stay green, right, for the next day. All right. I will take a look at crude and I will take a look at gold, and then I'm going to lock it up for today. Okay, so we had a micro crude trade early in the week last week. Now, one thing that I wish I could do on these prop firms, I know why they don't do it, but I wish they did. It's the fact that I wish I could swing trade, because trading crude oil day to day, don't get me wrong, it's very possible, right? However, I wish I could swing trade oil, because then I would, right? And I could just swing trade one micro and I'd be fine with that. Because I was long last week from this area. Let's see if I trade execution. Let me turn on trade executions. Trade executions. I'll go into trade executions here. It is not showing any trade executions. That is not right. Anyway. Anyway, last week I traded crude, and I had gotten long from this 56 area here. Okay. Now I built into this position. I put one at 40s. I put one at 30s. I put one at 20s. And then my big, I put two at 56. All right, the 56 area. And it had filled me on all of them on this downward push, right? And at one point I was down, it was showing me down like 150, 200, I think in the trade, something like that. Because I was building into the position as it was going down. Now I had a stop at 55.75. That was like as far as I was willing to let it go down. The ATR was 25 on a 5-minute, 25 minus 66 or 56 where I wanted to get in at. That is where I wanted to get in at. So 25 ATR, 55.75 was my stop. And as soon as we got this push rejected up back up to 56.33s on the 30-minute, I was feeling pretty confident in this trade. And I took it all the way back up here to the 57s, and I got out that day. I stopped trading it for that day because, I mean, you can only trade it day to day on prop firms. Then next day, it was a lot more volatile. We had some news come out, and I didn't trade it. I wanted to, but I just couldn't do it. Also, I think that day, I want to say it was the 21st, there was an AWS issue that happened. So, I mean, trading was kind of screwed. I can't remember. Yeah, it was that day, yeah. AWS issue, so didn't trade because we couldn't. Um, and by the time Friday rolled around and I started trading in my live account, we had already had this push up on the 24th. We already had the push up. So coming in on Friday, I was still bullish. I was still bullish oil, but it had already moved up 4 points, $5 from the lows because it went down to 56, all the way up to 62.59. So do the quick math, $6.50. It pushed up from the lows in less than 3 or 4 days. You got to be a little bit more cautious, right, about trying to buy highs. Because on the 4-minute, you have a couple of these fixed range profiles, fixed range volume profiles here on the 4-hour from previous weeks and previous days. So showing that there's a lot of volume in this area because I places before where it held support, places where it held resistance before. So you have to be cautious to where like, okay, so we had a rejection here, then we pushed up, and we're having these wicks as we push up. Now we had a strong bear candle here on the 4-hour on this one, and then we had a small bear close on right here at 61.42. So you have to be cautious here because it could reject. There could be a rejection here. Now we might find support at 60.50s, but you have to start looking at support options as we go down. This 30-minute support here at 61.35, 61.25 area, and maybe it bounces here and goes right back up to the 62.50s. That's possible. But if it's me, I'm trying to look for a better support option, a more higher probability location to get long or short. I would want to get long right here at 60s for next week. If we get down here to the 60s, I think between the 60s and 59.80s, I think in that location you might get a bounce. Unless there's news. News trumps all in terms of like levels. Levels go out the window when news comes in, so don't hold to that. Trading is risky. As the disclaimer says, most people lose money. Be careful. But if I was going to get long on oil, I would get long there. If I was going to get short on oil, you could take, like, you might get an initial rejection into 62.50s on the week. Past that, we're looking up here at 63.25s, 50s, and then 64s as possible resistance going up, right? So yeah, like if we push up here to the 62s, then you could try to get short down to the 60s if that's what you're looking for. But we've already pushed down $1, right? So while shorts can still be valid, you've lost a little bit of trade location. Just wait and see what happens, and then just use levels to try and trade off of. Okay, last one. We're going to talk about gold, and then I am going to get off here, and I am going to go to bed because it's almost bedtime. All right. right, let's go in and let's talk about gold. Let's talk about gold here. Okay, so for gold, last week, I say last week, but last week and the week before, I guess, was what I should say. The rejection here at 90s, so down almost 200 points. I say points, dollars, $200 from the highs. Okay, so not last week, but the week before, like this came in as significant resistance. Okay, then come into this week, and it immediately pushed right back up, all the way back up to the highs. Now people were coming in, like people were like when they came into this week, people were shorting here. They were like, finally, we saw some selling action come into gold. It is so overextended. We have to go down. I'm gonna short right here. And then it just keeps going up. It keeps going up. And then like, well, it's probably just retracing a bit. I'll add a little bit more to my short. I'll add a little bit more to my short. I'll add a little bit more to my short. And then they just kept shorting as it went higher. It broke the highs. Made new highs this past week. Destroyed people on that move. And then they're like, okay, now we're gonna sell it down. Okay, and then it sold down from 4,400 all the way down to almost 4420 level for 420s, 4020s. But it's so down. I think the low of last week. Let's look here. Right around 21 area. The low of last week. Before we found buyers, right? So I mean, it sold down pretty quick. This was a big drop this day. The 21st was a tremendous drop in gold. Like if you were short gold, like if you came in, like for me it would have been morning time, but if you got short at the 5 p.m. open that day, just one micro. Let's say we got short one micro. That is that's like a 300 point move in one day. One micro would have been $3 grand. I mean, it's all like, this is all hindsight, right? We're just talking about what ifs here. I'm just saying like, that was a huge move. So gold being as volatile as it is these days, the people who don't have the account size to trade minis should not trade minis, because you can lose an account so fast trading minis. Because especially if you're, some people pop up 3 or 4 minis. Now like, well, do you have 100K in your account? Because that is a huge swing. Like we're getting big swings in gold. And the more gold becomes, the value of it, if it gets up into like the 5-6K range, 100-day swings are going to become a norm, because at that point we're not talking about like 1 or 2% like it was when it was like 1800 and 2000, like a 100-point move when it was that low. That would have been almost that'd have been almost a like 5 or 6% move. So but going into this next week, right? Okay. We're starting to see some 4-hour support build up here. Okay. So gold is still in a bullish market. Now we did see some nicks in the armor. Let's say there's some nicks in the armor done this past week, and you have to be mindful going in that, hey, longs are not as protected as they have been. But also at the same time, it is still in a bull market. The narrative is to still cut rates. You still have inflation, so you still have a chance for a recession as well. You still have all the risk of the global economy slowdown. You have Japan talking about this printing more money, maybe causing more inflation. They're just going to destroy their yen. It's already it's already destroyed, but they're going to make it worse because they want to print more money. So the narrative and the fundamentals behind gold going up this high, I mean, it's still there. Nothing's changed there. Now it got overextended a lot. It got overextended quite a bit. So there was need for some correction. Now, is this it? Now, is this all the correction is going to have? It's just the 400-point drop from the highs corrected. Now we're going to go up and make higher highs. Now it's very possible, right? Because we still got to think. Now this is still a bull market on gold. Gold is still a bull market, and 2025 has been nothing but a buy the dip market all year. So if we look here, we had 1, 2, 3 really long wicks. So we found buyers in this location on gold. Then we had a push down here on Friday. Immediately pushed down here all the way back down to 40.55-ish area, which was a previous support a while back that I had marked, and support resistance marked a while back, and we came back down and we touched it and bounced, right? And then this was bullish engulfing of the previous candle. Like it engulfed the entire candle, and this could be like an indecisive, like wick, like up and down chop. It's very true. But then we had a 4-hour close above previous day candle, with a run up and rejected. And this next candle also closed green. Okay, so we are starting to see maybe some buyers in this location. So if I wanted to get long, right? Let's go down to a smaller time frame. Go down to the 30-minute. If I wanted to get long, if we sold back down to these 50s to 20 area from last week, that's a big range. That's a 30-point range. That's $300 on one micro, right? I would get long towards those lows because it holds a higher probability of it bouncing. Now, for shorts, I think shorts have to be careful because this market has shown to destroy shorts, and the shorts fuel the fire for the move to the upside. Okay, so we have to be careful if we want to come in here into gold this coming week and try shorting it, because we've had a pullback of 400 points. And now we're in this 30-minute range, hourly range, whatever you want to call it. And the range is between 64 and 50s. You can even say it extends down here. You can put like another horizontal line here at 24s. Didn't mean to drop that. But, so, this is the upper range. This is the bottom of the range. Now, if it comes up into this range, in these 50s and 64s, it has rejected once, twice, 3, 4, 5 times. So, by technical means, that has shown as resistance. So if we get a quick push up into that area, and you wanted to take a short, you can, by all means. You can do anything you want. But I would be out pretty quickly, okay? I would be very careful with shorts, because if we start getting 5 to 15-minute closes above these levels, let's say we get a 15-minute close at like 70s or above 70s, you have to get out of the way, because more often than not, it's going to look for higher liquidity somewhere at a different level. And then at that point, it's longs, because if we break above this range and we come back down and we test this range, all right? So let's say we have a move here, we break through after the fact, we come back down, we test 50s. We are now looking to get long. And what are we going to target? We're going to target these lows here. I guess in this case, these lows slash now highs. These are lows back on October 18th. That's what we're targeting, which is 4200s to 4210s. So we are getting long at 5150 area. Now we're targeting 4200s to 4210s, okay? Now, is it going to play out exactly like that? Who knows? We don't know. It could chop around in this range all week next week and be a good range trade all week. Now, that's also possible. We don't know, okay? This is only my opinion. This is not investment advice. Trading is risky. That's why I have a disclaimer at the bottom, okay? You take what you hear and you make your own opinion, okay? Don't follow my trades. Don't follow anyone's trades. Even if they're like millionaire traders, you can still lose on their trades, because they might have more capital than you and they have more risk tolerance. They don't have emotional uh, problems, or they don't get emotional in markets as much as some other people. So you just gotta form your own opinions. Just take what you can get. Um, okay, so this could happen. Next, we could come up here and then we could reject, right? Back down here to the 50s. That's also possible, okay? Because this is a range. We're ranging here. Like, between the 22nd, not 22nd, we won't count the 22nd, but between like, I guess 22nd, okay. 22nd to the 23rd and Friday the 24th, we ranged all 3 days. Consolidating, okay? We had a big move down. Now we're consolidating here on the 30-minute, daily, hourly, whatever you want to call it. We're consolidating, okay? We can come up here, we can reject back down here to the 50s. That's also possible, okay? And then once we get up down to these 50s, we could bounce back up to the, like, that could be a 100-point move, right? We could bounce from there. So, am I playing inside the range? No, I'm not. I'm not touching inside the range, because it could stop on a dime at 4100 just because of it's a psychological 4100 level. But it hasn't really shown, like, I guess it showed some resistance there and a bounce there. before in 90s, but like I ain't playing in the middle of the range. That's just too risky. You can go either way. Now, upper end of the range, I'm willing to play. Bottom end of the range, I'm willing to play. Probability is in my favor. Okay. And you risk the lows, right? If you get in around 50s to 30s, 20s, you risk the lows. You can even add ATR if you want on the 5 or 15 minute ATR. I wouldn't do like 30-minute or hourly unless you're doing low size, because I mean it's just the ATR is huge. So we're either looking for it to come down and bounce to go long. Okay. We're looking for it to reject here, and we can go short back down to these 50s. That's also possible. Or we're looking for it to bounce or to take out the highs on a strong bullish momentum, come back and retest into these 50s and 60s, show one good green candle on the 5-minute, one strong green candle on the 5-minute rejection, showing that this now level is being supported, that buyers are coming in. And once buyers come in and show that 5-minute green candle, the next candle is where we want to get long. Okay, we have to be patient, and we have to cut our losses if we're wrong early. Okay, that's the whole point of trading, is risk management. Okay, we want to be in and out quickly, don't want to stay too long. We just want to take our small gain and be done on the day. Okay, whether that gain for you is $200, $300, $400, great. If that gains $50, okay. If that gains $1,000, $2,000, $10,000, okay. If that's what you need to have, okay. But just be humble and just keep perspective, right? Don't follow everyone that's like posting up thousands and thousands of dollars every day and like I got to do the same thing or I'm not as worth as much as they are. Bad mindset. Okay. I'm of the mindset to where I want to try and be consistent for a year. Because like even at, let's say, $100 consistent profitable for a year, let's say I have 200 profitable days and 50 unprofitable days of 100. Okay, now this is 200 winning days and 50 losing days in a year. Now that is a good record on the year. Okay, it is a unlikely record because most people will lose more often than not, right? But let's say if you did it $100 for 200 days at the trading year, it's to 20 grand, right? You come in 50 days of $100 losing and you stopped it for that day. Okay, 5 grand of losing, 20 grand of winning. You come out with 15 grand of extra money on the year. Now, of course, on prop firms, that's you technically only half, right? And you have to have 150 to take a payout on Top Step. You have 5 $150 days, so every now and then you have to come out and make a little bit more, which is one thing. Like I understand why they do it, but I think if you're, let's say, if you have 30 days of $100 each day, I think that constitutes for a payout. And that's strong, consistent behavior. But that's just my opinion. That's just my opinion. Won't go any further into that. But just showing consistent action, $15,000 extra for anyone is a lot of money, in my opinion. Now, if you make billions of dollars a year, millions of dollars a year, then yeah, 15 grand might not be as like life-changing, right? But for me it's life-changing, okay? For me it's life-changing. For a lot of people trying to trade, it's life-changing money. 15 grand. 15 grand pays off most of my debts. Okay, so, and if I can do that in 1 year, I changed my life. Okay, and then the next year maybe I can try to up it to, instead of $100 a day, now I've upped it to $110 a day. So I've added 2 more grand just off of $10 a day, 2 more grand. But I keep my losses the same at 100, so I'm still losing only 5,000. But I add 2,000 to my profits, and then next year I make 17. And I have no more debts to pay off. I take that 17,000 I invested in the S&Ps or Vanguard or like some dividend stocks that are worth it. Just basically invest in the ETFs and let that money build, compound on itself. And that way I can build up a retirement. Okay, like, and then the next year I'd maybe do another 10. Okay, now I've added another 2 grand. Okay, and you build up your account where you can take even not more. You don't want to just full on leverage, but you want to leverage yourself to be able to make bigger trades in the future. Of course, you want to do that. Okay. Um, but initially, starting out, small, consistent profits is what will keep you in the game longer. Okay. The stock market ain't going anywhere. There's always going to be more trading opportunities. If you can just find 1 or 2 consistent setups that you can take every day, and some days are going to be a no trade day. Some days you're going to have chop and it's not going to be worth trading. Now, if you can identify that early and save yourself, then that's great. Sometimes you won't be able to, and that's going to be a hard day to trade. Okay? But it's all about just every day, a little bit at a time, getting better. Um, oh, Trade with Viru, thank you for the subscribe. I appreciate it. Um, but yeah, just take it consistently. Don't look for like becoming rich overnight. It won't happen, okay? We're trying to turn this into a business, okay? We're trying to be a business. We're not trying to gamble our way. Gambling's too inconsistent. If you're just outright gambling, not making at least educated guesses of where it could bounce, like high probability setups. Okay, but I know we went off on a little tangent there. This is what I'm looking for on gold. Like I said, I'm looking for an area, like it could even extend down here into the 24s, and it's very possible that it breaks down below and then finds a bounce. That's also possible. These are not pinpoint. This is exactly what's going to happen tomorrow. Okay, I'm talking about the week. Okay, what we could see on the weekly time frame. And I think on the weekly time frame, if we can get a close above 4160s, 4170s here, if we can get a weekly time frame close above, I think this has opportunity to retest some of these other levels of support slash resistance that there are now. Okay, because this is still a bullish market, like I said. So I think the opportunity going into this next week is more on the long side. There will, of course, always be short opportunities, but you need to be careful on the short side. Like I said earlier, we've moved down quite a bit in a bullish market. You could call it a correction. And until we can see a breakdown of this level and a close below 4,000s, I doubt that there's going to be much more downside in the gold market. Okay, I think that it's best to wait for a good trade location, a good trade setup. Okay, so break above, retest, get long, target 4200s. That's one idea. It maintains the range and rejects here from 54 to 64. You get short, put a stop above the range, try to target the lows of the range. That's also a viable option if it happens, okay? We want to see a 5-minute bear bar rejection below this this range resistance. We want to see a rejection close. Just like we want to see if we're playing longs, we want to see a green bar rejection showing support buyers coming in to get long. That's what we want to see. So that's where we're looking. If we are trying to get long or short on gold. But we shall see. That's pretty much what I'm looking at on gold. We've already talked about crude for the day. We've already talked about equities for the day as well. If I had an audience to talk and ask, I would ask them what they want me to talk about, but I think it's only me in here. But I live in Japan. I live in Japan. Talk a little bit about the Nikkei. I don't trade the Nikkei, but I will talk about it because I live here. Okay, so the Nikkei, of course, is also making all-time highs over and over again. The Nikkei hit 50,000 for the first time ever last week. And we did see a rejection from 50,000 back down at 48,600s, which found support and rejected 4 times on the 30-minute, not even 5 times on the 30-minute. You could have got long here for pretty much the rest of the week on a swing. But going into this next week, we do have news coming out, and you gotta be mindful of the news coming out in Japan, right? So if we look at the economic calendar, right, going on to this next week, it's always good to look at this every day. I should have put in calendar instead of just economic. My bad. Okay, so if we look at the economic candle on trading economics, a lot of people look at the same calendar. We can do all major ones, but going into this next week of trading, I normally just look at US, China, and Europe and Japan news. Any other things really don't, in my opinion. Not things matter, but they don't matter as much. Australia is giving their inflation rate next week. That might move the market a little bit in the morning. For me, morning for me would be nighttime in America, because I mean this is set for Central Time, so 7:30 Central Time, Australia. But that would be morning time for me in Japan. But to start off the week on Monday, there's not really much big news. I mean, we've had numerous speakers, and we never know when a Trump tweet will come out or a press conference that he calls will come out. Always be mindful of that when trading. But going into next week, there's no big news on Monday. There's not. The biggest news on Tuesday is that we have the crude oil API, so that might move crude a bit, but that would be at the end of the trading day. So, I mean, if you've already traded Oil for the day shouldn't matter too much unless you're swinging it. You have Australia's inflation rate. If you're trading the overnight market, that matters to you. Now, consumer confidence. Now, this is a big one for Japan. This will move the yen and the Nikkei. So that's a good one to look out for. Now, this is, I mean, Spain, but like we really, I guess we want to pay attention and see like the if the GDP is going up or down, but it tends not to be market moving. Um, but for the Nikkei and the yen, the consumer confidence matters. You have Canada, Bank of Canada's interest rate decision. Now this matters, especially with the dollar, and this might move gold a bit too. But other than that, we have also the U.S. interest rate decision. Now these are big news for the week. So on Wednesday is what we're waiting for, right? Monday's usually a chop day, right? So if there's big news coming in on Wednesday or Thursday, Monday typically is a chop day, right? So we're not looking for a big move on Monday. So I wouldn't be looking for anything now, and that's not saying that we come in on Monday and we don't have a big move. We could, because I mean, there's been news all weekend about China and the U.S. trade deal, and if there's hints of a tentative one, which I believe there are, on a trade deal with China and the U.S., that could technically be bullish in the short time frame, right? Because I mean, it lessens the chance of there being a tariff in China up at 100% that he keeps boasting about. And if that's off the table, then there's no worry in the market, right? So we could come in on Monday at overnight open, and we could just rally 20, 30 points into 68, 50s on the ES, right? That could possibly happen. Okay. Um, but typically Monday is going to be your chop day. Tuesday, uh, you could see a move outside of Monday's chop if it's choppy, right? But typically your big moves happen on Wednesday or Thursday, right? So like Wednesday or Thursday is typically the bulk of the big moves, because you have typically your big news days in the middle of the week. And this week in particular, we have Fed rate decision on Wednesday. That could be market moving. Now the consistency is that, hey, they're going to drop at 25 basis points. I think anything that comes in line, if they're forecasting a 25 basis points down, I think it's bullish, of course, but also at the same time, it's expected. So it might already be baked in, right? Now, if we get a surprise and they cut it by 50 basis points, okay? Now that is a big surprise, and I think that could be very bullish early on for a sell-off later. And if it comes in and they don't cut, if we have a surprise don't cut, I think that's just bearish. Then we might see an initial drop, and then eventually a buy back up, right? It might drop 30, 40 points, and then eventually you just buy back up. It might be a buy-in opportunity in this bull market, but I would wait until Tuesday's trading to form a opinion. But other than that, let's see, on Wednesday night, which will be Thursday morning trading for people in Japan, you're going to be having the Bank of Japan interest rate decision. Now, Bank of Japan and Japanese people, they move so slow on making any kind of decision policy-wise. And especially since we have a brand new prime minister in Japan. And I don't care, like, well, like, it all boils down to her policies. I don't care that she's the first female prime minister in Japan. That doesn't bother me. But she's extreme right, and she's all about physical policy and printing money. Japan already has so much debt. I think they're up at 360% debt to per capita, like GDP to per capita. Like they're like 360% debt, the highest country in the world for debt per capita. And she's all about more, she wants to print more money, more fiscal growth. And I'm just like, you're just going to kill your country. But I'm not a politician. I studied politics in college. And then I studied it so much that I got tired of it before I got out of college. Um, anyway, then you have the GDP growth rate for France on Thursday. That really doesn't do much. And then you also have Germany at towards the end of the week. Then you have Italy as well for GDP growth rate. So you have all the growth rates coming out this week. Inflation data for Germany. Now the EA, the European, like you have the interest rate decision for them, and then it looks like the forecast is to pause. But they've already cut quite a bit. Okay, Europe is already down to like more of a neutral rate of 2%. And they might stay in this area for a while. We'll see. And other than that, China PMI towards the end of the week. That's Thursday. Jobless claims. So this a lot of data here, but it's not showing as high value data. But it could be market moving. Jobless claims. I mean, the labor market is always a factor, so be mindful when trading that. Then you have Italy and inflation rate flash data on Friday. So basically, Wednesday's looking like your big data day, like because on top of like the interest rates, you also have the meeting with China and US that could also have effect on the market. So basically, Wednesdays you're looking like your big day for a move. Also your riskiest day, like for volatility wise, like I would trade small on Wednesday if I want to trade that day. Or I would trade early and be done early before the news comes out and then watch the fireworks later on. I would do that, but this is my opinion. Then you have Thursday with all this data coming out in the morning. Or should come out, but yeah, that's right. The government shut down. We don't get this data. What am I saying? Sorry, it's like 2 a.m. here, so I'm kind of spacing on my in my mind here. But all this data would matter, but we don't get it because of government shutdown. So not until the government opens back up will we start getting that data again. Sorry. Okay, so basically we're looking at Wednesday. Monday, Tuesday is like a no news type of day outside of like breaking news or any speaker related content or Trump coming out and saying something. So we're not really looking for anything much there. Alright, so that's your economic calendar. But one thing I will say about Japan and the Nikkei with the new prime minister that we have right here, um, is that going forward, if they do start printing more and more money, and they continue with their physical growth path, it will ultimately break the yen. But at the end of the day, it's still decent for stocks. As bad as it sounds, like it's bad for their currency, and it will weaken their currency more. Um, but ultimately, it's good for stocks if they keep printing money like that, because more money gets pumped into the economy, and then it's good for business, right? So market could keep going up higher unless some of her policies get blocked, but we'll see. Um, it heavily depends on the new financial minister and the Bank of Japan and what they do going forward with rates. They're already slow to make decisions, and now you're going to have a prime minister fighting them on raising rates. So it would be interesting to see what happens. But I think that coming into this week for the Nikkei, um, I mean, it's still up and to the right. Just up and to the right, like you have this trend line here. You have this trend line here. Something like that. So get a break of all-time highs. So let's go ahead and what was the break of all-time highs? 30. Have a line there. Okay. Okay. So going into the week for the Nikkei, I would say that what we have is still bullish momentum to the upside, right? I mean, we're making higher highs and higher lows. Higher high, higher high, higher low, higher low, higher low, pushing up. And I think that this 50,000 is going to get retested. And I bet it gets retested on Monday. I think Monday opens up and we retest 50,000 almost immediately in the Japanese market. I could be wrong, but this is looking at a weekly outlook, okay? But I think at some point in this next week coming in, we get another test of 50,000 on the Nikkei. It's just a lot of bullish momentum, especially behind the new prime minister. So yeah, I think it's a. I think if we get a pullback, let's say if we get a pullback to 49,300. I think 49,300 could be a long potential. Okay, let's say we get a 40,300 push down, right? You have this support, supported before, supported before, supported before, resisted before, supported before. We have this trend line that I put, like, don't get me wrong, I didn't put it very neatly there, but you get the gist of that trend line being there. The trend line plus support, I think we just come down here to the 300s maybe even dip into the 200s briefly, find that liquidity there, get a couple of those stop orders that might be down there, and or limit orders, and then after that, go back up here to 700s, retest those, and eventually break out towards 50,000. I think that's what happens on a weekly time frame. I bet we make another run at the 50,000s. This is more likely than not. Like, if you want to be bearish and short an all-time high market, which is very unrealistic and also very risky, then I mean, I think that you just have to be careful, because I mean, you could short 49,800s and then risk the highs. Because I mean, we have rejection here before. We had rejected here at 880s, rejected here at 800s even. I mean, yeah, there is some resistance there briefly, but is that really worth the risk in a bullish market? Come on. Especially in Nikkei, which moves for a lot per point. And it's very choppy too, because it's typically a low liquidity, low volume market. So you have more chances of being whipped out. But yeah. So that's the Nikkei. Can't think of any other market, and I don't have anyone to give me any market they want to see, because I could sit here and do all these markets, but I'm just going to do the main ones that I trade. I don't even trade the Nikkei, but I was going to give my opinion on it because since I live in Japan. But it's almost 2:30 in the morning here in Japan, and I got to get to bed because I have work in the morning. The yen. Speaking of work, I get paid in yen, and this is sad for me. Now, what I hope for the yen coming into the week is that we have tested the lows again here at 650s, 65 650s, and we have found some support. We have green candle. Now we have a pushback down. Now, this goes back to October 10th of this year. Now, this was also a low back in January. Okay. Now, the low in January was 375. We could still get a push down there before finding buyers. I mean, this is 375 400s on the yen could be a prime location to buy, with a buy order sitting at 65 evens as well, because I think once we get down to 65 evens, and this is part of me hoping, right? We won't know until we get down there and see what happened at that level. But I would hope that it would just be supported for a move back up to 67s, eventually 70s, because the more it goes down, the more my salary gets hurt when I take that yen and try to switch it over to US dollars. So I get punished pretty hard if I try to do that. But it's crazy that I can't just close that out. I know it's weekend maintenance mode. I get it. But alrighty. As far as the yen goes, I didn't really put a formal trading plan out there for the yen, but Uh, what I would look for is to find some support here between 700s and 400s, and then 65, 700s to 400s, and look for that to be bought back up, hopefully to 66, and be supported. I think if the if the U.S. comes out and cuts on Wednesday, I think that supports the yen. Okay, because that will ultimately make the dollar weaker. It will ultimately make the gold stronger, and it would also support the yen as well. So I would lean towards that being the case. So longing the yen, if you could hold over the week, longing the yen down here at these lows could be a good opportunity, but also at the same time could not be, right? You never know. It's just all risk versus reward and risk management, right? If you're wrong, get out quick. If you're right, try to ride it as long as possible. Just follow your plan. Don't trade no one else's plan. Follow your plan. That's the best thing you can do. Okay, well, it's been fun talking to myself. Um, Unfortunately, I didn't get the opportunity to talk to anyone tonight about what they're seeing, get their opinion. But hopefully, I provided my opinion, and if someone was able to, I don't know, lurk in the shadows, maybe if someone lurked and found benefit from my opinions, then great. If someone plays back this stream later and gets some value out of it, then that's also good. Um, my whole goal of this stream and for YouTube is to provide value as best as possible. And I'm not like, yes, I would love to make money from streaming, but also at the same time, I'm trying to make money from trading. I'm hoping that in my journey here, trying to be a profitable trader, right? I'm hoping that my journey maybe can help others struggling and provide value. And also, it gives me a sense of responsibility towards myself to talk out my trades, what I'm seeing, what I'm looking for, helps me be accountable. Also, it's a good trading journal to see what I'm looking at and see what I want to happen or like what I'm looking to do for that day or for this next trade. So I think it kind of holds me accountable um, because at the end of the day, my why for doing this. So like if you have to find your why, right? My why for doing this is for my family and for my son. And hopefully I can provide them a better life going through towards the future. Um, and that's my why. So every single time that I have a mistake or every single time that I break a rule, I have to hold myself responsible um, and face the fact that every single time that you do it purposely, like if I do something stupid purposely, or if I break a rule that I've broken before, I need to be reminded that hey, you're letting down your family each time that you do that. You're getting further and further away of actually being able to make life better for your family. So that's my why. And that's why I keep at this every day, even though it makes me lose sleep. I lose sleep constantly, and always tired because like right now it's 2:30 in the morning. I'm doing this. I have to get up at 7:30 to go to work. So I got to get up in 5 hours to go to work. And is it hard? Yes. Do I get enough sleep? No. But it's what motivates me to keep going because I'm doing this not only for me. I'm doing this for other people as well. And yeah, that's my why. Um, well, like I said, thanks again for anyone who stopped by. If you found value, that's great. If you are playing this back and you find this valuable or you found this beneficial for you, please drop a like and um, subscribe. And I hope going going towards the future here that I'm able to provide value to people in the market. Okay. At the at the very least, maybe some self accountability for myself and a trading journal. Anyways, I appreciate everything, and I will see y'all tomorrow when I get on here to try and stream the. I might try to stream a little bit of the London Open and then stream again for the New York Open. We will see how things go tomorrow. Okay. Uh,
Nobody else can do this job because they got
until
too much
tomorrow.
feeling.
Okay. I'll see y'all there. Trade safe, be safe, and happy Halloween for people who are looking forward to Halloween this week. Alrighty. Y'all take it easy.